Have you ever wondered if you're paying more taxes than you legally need to? Thousands of LLC owners send extra money to the IRS every year, not because they're doing anything wrong, but because they never made one simple tax election. If your LLC earns more than $50,000 a year in profit, this could save you thousands of dollars annually. Today, I'm going to explain when it makes sense to elect S-Corp status for your LLC, and how that move could potentially put $5,000 to $15,000 back in your pocket every year. Let's dive in. What is self-employment tax? First, let's clear up a common misconception. Self-employment tax is not the same as income tax. When you work a regular job, Social Security and Medicare taxes are split between you and your employer. You pay 7.65%, and your employer pays the other 7.65%. But when you're self-employed, you're both the employee and the employer. That means you pay the entire 15.3%.
So if your LLC earns $100,000 in net profit, you could owe roughly $15,300 in self-employment taxes alone, before income tax is even calculated. That's a significant expense for any business owner. How most LLCs are taxed? By default, a single-member LLC is taxed like a sole proprietorship, while a multi-member LLC is taxed like a partnership. In both cases, all business profit flows through to your personal tax return, and all of it is generally subject to self-employment tax. Whether you leave money in the business or transfer it to your bank account doesn't matter. The IRS still treats it as your income. And that's exactly where most LLC owners leave money on the table. The S-Corp advantage. An S-Corp election doesn't change your LLC's legal structure or liability protection. It only changes how the IRS taxes your business income. Here's the key difference. As an S-Corp owner, you're required to pay yourself a reasonable salary.
That salary is subject to payroll taxes. However, any remaining profit can be taken as a shareholder distribution, and shareholder distributions are generally not subject to self-employment tax. For example, if your business earns $100,000 and you pay yourself a reasonable salary of $60,000, only that salary is subject to payroll taxes. The remaining $40,000 can be distributed to you without self-employment tax. That's where the savings come from. When does it make sense? This strategy isn't for everyone. There are additional costs involved, including payroll services, bookkeeping, and filing an S-Corp tax return. Because of those costs, most tax professionals suggest considering an S-Corp election when your business consistently earns at least $50,000 to $60,000 in annual profit. Below that level, the savings may not outweigh the added expenses. Above that level, the numbers can become very attractive. Many business owners earning $80,000 to $150,000 in profit save several $1,000s every year. Real example. Let's say you're a consultant and your LLC earns $120,000 in net profit. As a regular LLC, you could owe approximately $18,360 in self-employment tax. Now let's assume your LLC elects S-Corp status and pays you a reasonable salary of $70,000. Payroll taxes apply to the $70,000 salary, which is about $10,710. The remaining $50,000 is distributed as shareholder income and avoids self-employment tax. That's a savings of more than $7,000 in a single year. Over 5 years, that could mean tens of thousands of dollars staying in your pocket instead of going to the IRS. The important fine print. Before you rush to make the switch, there are a few things you need to know. First, you'll need to run payroll. Second, your S-Corp must file its own tax return each year. Third, some states charge additional fees or taxes that can reduce the benefit. And most importantly, you must pay yourself a reasonable salary. The IRS pays close attention to this rule. If you try to pay yourself an unrealistically low salary and take everything as distributions, you could face penalties and additional taxes. This strategy works best when it's done correctly and documented properly. Should you elect S-Corp status? You should consider talking with a CPA if your LLC consistently earns more than $50,000 to $60,000 in annual profit. You actively work in the business. You're comfortable running payroll. Your state's fees don't eliminate the savings. You expect your income to remain at that level long term. If those boxes describe you, an S-Corp election may be one of the most valuable tax moves available. The tax code rewards people who understand how it works. And now you know one of the most powerful tax saving strategies available to LLC owners. If you found this video helpful, hit the like button and subscribe for more content on taxes, business finance, and wealth building. And let me know in the comments, are you currently operating as an LLC or have you already elected S-Corp status? Thanks for watching, and I'll see you in the next video.